When you're thinking about exciting, high growth investments, I'm guessing trash collection probably isn't the first thing that pops into your head. But today, we're going to look at Waste Connections, ticker WCN. They've somehow managed to turn this famously unfashionable industry into an incredible story of profitability. And we're going to break down exactly how they pulled it off. And this quote right here, it basically tells you everything. This is the absolute core of their entire strategy. While all their competitors are duking it out in the big, crowded cities, Waste Connections has built its empire by doing the exact opposite. It's a totally counterintuitive move, and it's the secret sauce to their success. So that really brings us to the big question, doesn't it? I mean, it seems completely backward. How on earth does a company win by actively avoiding the largest arenas? Well, let's dive into the playbook that answers this, because it explains exactly how WCN consistently outmuscles its rivals. Right, so the first thing to understand is that this isn't just luck. WCN's success is absolutely the result of a highly disciplined, repeatable business model. It's a very deliberate strategy that sets them completely apart from pretty much everyone else in the game. Okay, so here's maybe the best way to picture their strategy. Imagine their competitors are all fighting to be one of many sharks in the huge ocean. Waste Connections, on the other hand, wants to be the only shark in hundreds of smaller pods. They target these secondary cities and markets where they can get exclusive contracts, and by doing that, they achieve local dominance. And that dominance gives them the holy grail in business, pricing power. What you're looking at here is their self-reinforcing flywheel. It's brilliant. Step 1, they target those niche markets we just talked about. That leads directly to step 2, they gain pricing power. Then comes step 3, and this part's key. They empower their local managers. That makes them a super attractive buyer for all these small family-owned businesses, which of course fuels step 4, their M&A growth, which lets them buy their way into even more niche markets. You can see how each step just perfectly feeds the next one. And that third step, empowering the local teams, it's all built on this philosophy they call servant leadership. Now look, this isn't just some fluffy corporate slogan you see on a poster. It's a real powerful competitive advantage. Think about it. If you've spent your life building a family-owned trash hauling business and you decide to sell, you're going to trust the company that values your local team and promises to give them autonomy. This gives WCN a massive edge in the M&A game, which is the absolute engine of their growth. So the strategy sounds fantastic on paper, right? A unique market focus, a culture that just fuels acquisitions. But as an investor, you have to ask the tough question. Does this actually show up on the bottom line? Do the numbers really back up the story? Well, the answer to that is a resounding yes. When we actually put WCN's financials side by side with their much bigger competitors, the advantage of their strategy becomes crystal clear. The proof, as they say, is in the profits. Just take a look at this chart. This shows adjusted EBITDA margins, which is a really good way to measure a company's core profitability. For 2024, Waste Connections is the clear leader at 32.5%. And that gap between them and the others, it's not small. This is direct, quantitative proof that their strategy of avoiding those cutthroat big city battles leads to better profits. It's right there in the numbers. And it's not just about being more profitable, they're also growing way faster. An 11.2% growth rate in a mature industry like this, that's really, really impressive. It's all driven by that powerful 1-2 punch, being able to raise prices in their captive markets and their relentless acquisition strategy. This table here really sums it all up perfectly. You've got best-in-class margins and faster revenue growth. But, and this is a big but, look at that last row. That's the EV to EBITDA day multiple, a key valuation metric. At around 20 times, WCN trades at a pretty significant premium to its peers. The market already knows this is a high-quality company, and as an investor, you definitely have to pay up for that quality. Now, of course, no investment is a sure thing, and it would be irresponsible not to talk about some of the serious challenges facing the company. To get the full picture, we have to address the landfill in the room, both literally and figuratively. And this is a massive number. There's a very serious issue at their Chiquita Canyon landfill out in California, and it resulted in a staggering $601.6 million impairment charge. That's basically a massive write-down of the asset's value. This is a material problem, it's hitting their margins, and it carries the risk of future costs and lawsuits. Frankly, it's the single biggest risk for investors to be watching right now. And it's not the only risk out there. The business is pretty sensitive to the overall economy, especially when it comes to construction and oil field waste. And when you're doing as many acquisitions as they are, there's always a risk that one of them could be integrated poorly. Plus, the prices they get for recycled materials are notoriously all over the place. These are all very real factors for any investor to think about.
So let's bring this all together. What we've got is a unique strategy, fantastic financials, but also some pretty serious risks. For you, as an investor, it all comes down to weighing the bull case against the bear case.
And here it is, all laid out. The bull case is pretty simple. You're buying a best-in-class company. It has a structurally superior business model, top-tier profitability, and a growth engine that just keeps on churning. The bear case is just as clear. You've got a major unresolved problem with that landfill, you're paying a premium price for the stock, and it's not completely bulletproof if the economy takes a downturn. And that really leaves us with a final, critical question for any potential investor. You have a company that is demonstrably, provably better than its peers, but the market knows it, which is why the stock is expensive, and it comes with a significant known risk attached. So, does the quality of the business justify paying that premium price, even with the problems? That's the decision on the table.